Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing natural gas and looking at some of the resource equities that we can trade to try to make money. Looking at the daily chart, nat gas has been pretty choppy in this range. Full disclosure, our members were able to cover our KOLD short for nat gas, basically selling at 41.36, entering at 34.15 for just over 21% gain on the trade. Now, just because I covered my short doesn't mean nat gas can't go lower. It doesn't mean it can't go higher. I mean, we're just trying to dissect and find pieces of the puzzle here. Ultimately speaking, we still have this golden cross that is set to occur very, very shortly. Unless nat gas has like a huge drop, this golden cross is very, very likely to happen. Now, typically when you get the golden cross, price action usually sees sellers into that area. We're actually seeing that very, very similar pattern play out. We got the golden cross in EQT here. This is a nat gas resource stock. And really, since you got the golden cross, price action has been choppy, sloppy, and down. Then you look at AR, another one that had that golden cross way back here, all the way back in April. Look what happened. Price ended up being choppy and selling off a touch. So we're at a key inflection point here where nat gas is about to get that medium to long-term bullish signal. However, typically investors sell that golden cross, shake out the weak hands, build a little bit more of a consolidation base, and then push it higher. So I do think that there is a potential for nat gas to actually see a little bit more downside. And it's actually in a little bit of a tricky spot. Although I'm bullish over the long term, over the medium and long term for the next, say, 3 to 6 months, in the next couple weeks, I do think that it's going to be a little bit choppy, which is why I'm staying aside with this asset class. And the interesting thing about this asset class is that you're still technically putting on the larger term time frame lower highs, which is a downtrend. High, lower high, lower high, lower high. This could be setting up for a potential rejection here. However, we need to get a weekly close above this high wick of around 312 in order for us to break the true downtrend. You can see we've wicked there, never fully closed, wicked there, never fully closed above it. So if price action can actually get a weekly close above this wick high, then that does suggest a much, much higher degree of probability that this daily golden cross is about to shape up and give us some bullish price action. Now, the big thing about nat gas is that it did have a bit of an attempt at a breakout out of this inverse head and shoulders, as you can see here, but it got rejected. So the question is, are we coming back up there to test it again? If you get rejected for a second breakout attempt, then I do think we're going to retest around 227. But if we break out past this little horizontal flat neckline, nat gas has a whole bunch of momentum. And again, one of the reasons why I'm just staying cautious is because you're getting a mixed picture. The fundamentals are mixed, the technicals are mixed, and we just quite don't know if we're going to fall to the lower boundary range or if they're going to try to push us higher. So right now, this is a no-touch trade for me, and I'm waiting for a little bit more data, but it's pleased to know that our members were able to take a nice chunk of change on really both short opportunities. We actually shorted nat gas on this parabolic rise, and we also shorted nat gas over here again. So needless to say, I am looking for a long entry. I do think that there's a strong chance, but I'm just waiting for a little bit more data because I do think there could be one more shakeout low before we get a bigger move to the upside. And again, you look at a name like EQT. This one is approaching its inverse head and shoulders neckline where it broke out previously right around here. So you can see that there's potentially a little bit more downside to around this $37 handle. You look at AR. AR is another one that looks like it wants to retest this little previous consolidation range right around 31 bucks. So you can see potentially a little bit more downside in the near term. Then we look at LNG. LNG is another name that is on the near-term precipice of trying to break out, but this has been one large base just coiling on Cheniere Energy. And once you do get that definitive breakout, then that could be a very, very big mover in the near term. And I do think you could push for this gap fill at 181. But since we got that high volume impulse green candle as of Tuesday's close, we really want to see another higher daily close above here to confirm this high volume potential breakout. In the near term, though, you can see that if I adjust this trend line, no real technical breakout has officially occurred yet. If you're drawing from this pivot high to that pivot high, we have not got the technical breakout just quite yet. So all eyes are on nat gas. I am interested in accumulating equities as well as the underlying commodity, but I do think that we just need to be very, very careful in the near term because there's going to be some choppy price action ahead.